All right, so let's be honest. The market news has been kind of throwing us some curveballs lately,
Oh,
right?
sure.
We've got these cryptic headlines about something called DOGE
Hmm.
and, kind of whispers of these major global shifts happening.
Yeah,
And if you're feeling a little overwhelmed, I think you're definitely not alone.
I think a lot of people are.
Yeah, and that's why we're doing this deep dive today into this recent Jefferies report on market trends,
Right.
especially in Asia.
Yeah, this report really zeroes in on India and Indonesia,
Right, exactly.
which I think gives us a really unique lens to view like broader global trends.
Yeah, I think that's a good point. So let's tackle this Doji thing head on.
Okay, yeah.
Right, you might be wondering what it even is.
Right, like what is that?
Yeah, well, there doesn't exactly spell it out, but analyst Christopher Wood seems to think it's a big deal.
Hmm.
He suggests the 10-year Treasury bond yield, which is currently at 4.3%,
Right.
would be even higher if DOGE wasn't in the picture. So it seems like DOGE could be a code name for a new set of economic policies,
Right.
a technological development,
Mhm.
or maybe even something else entirely,
Mhm.
something that's having a major impact on the market.
Okay, so clearly something big.
Yeah, and the report kind of hints that DOGE is having a ripple effect on the U.S. economy.
Oh, really?
Yeah, potentially even leading to deflation.
Okay.
And this is really interesting because the Atlanta Fed's GDP Now estimate for the current quarter has already dropped from 3.9%
Wow.
to 2.3% in just 3 weeks.
That's significant.
That's a huge drop.
Yeah, in such a short time.
It makes you wonder what DOGE truly represents.
Yeah, like what is this DOGE?
Yeah, and to add another layer of intrigue, the report mentions the Trump administration
Well-
working to establish the credibility of DOGE in the bond market.
Oh, wow.
So what could this mean for the future of the U.S. dollar?
Yeah, that's a good question. I mean, it definitely raises some eyebrows.
Right.
And this brings us to another kind of intriguing point in the report.
Right.
The idea that the peak of American exceptionalism might be behind us, at least in terms of the stock market.
Okay, so all that talk about American exceptionalism at the end of last year might have actually been a classic sign of a market top.
Exactly.
Yeah.
I mean, I remember thinking it felt a bit overconfident at the time.
Yeah.
And the report backs this up with some hard data.
Okay.
For example, the MSCI USA's weighting in the MSCI AC World Index peaked at 67.2% in late December and has since fallen to 65.3%.
Okay.
Even the dominance of those massive U.S. tech stocks,
Right.
the ones we all talk about,
Yeah.
might be waning. The combined weighting of Microsoft, Amazon, Alphabet, Meta, and NVIDIA in the MSCI AC World has also declined.
So are we potentially witnessing a power shift on the global stage? Is this the beginning of a new era?
It certainly prompts that question.
Yeah.
I mean, the U.S. has been a dominant force for so long, but these indicators suggest that other players are starting to gain traction.
Okay. That's a big picture thought to chew on. Now let's zoom in on a specific region that the report highlights. India.
Okay.
It seems the Indian stock market, particularly the Nifty index, has been taking a bit of a beating lately.
Yeah, that's right. It's been going through a correction, and small and mid-cap stocks have been hit especially hard.
You mentioned multiple compression as a potential driver for this sell-off. Could you unpack that for us a bit?
Sure.
What exactly does that mean, and why is it happening now in the Indian market?
Okay, so multiple compression essentially means that investors are less willing to pay high prices for a company's earnings. It's like deciding that a trendy coffee shop is no longer worth the $8 latte, even if the coffee is still good.
Yeah.
In India's case, it seems like investors are becoming more cautious about valuations, possibly due to global uncertainties or concerns about specific sectors.
So it's not necessarily that the underlying businesses are performing poorly, but more that investors are reassessing what they're willing to pay.
That's a good way to put it.
Yeah.
And this reassessment is reflected in the fact that foreign investors have been selling off Indian stocks pretty aggressively, with net sales of $12.2 billion so far this year.
Wow. That's a serious outflow of capital.
Yeah.
But the report did highlight a silver lining amidst this sell-off, right?
Yes.
Something about domestic investors stepping up to the plate.
That's a crucial point. Despite foreign investors pulling back domestic flows into equity, mutual funds in India have stayed strong,
Okay.
fueled by those monthly FIP or systematic investment plan schemes.
So while foreign investors are getting skittish, it seems like domestic investors see this as a buying opportunity.
Yeah.
Almost like they're doubling down on their belief in the long-term prospects of the Indian market.
Yeah, it's an interesting contrast.
Right.
And it certainly suggests differing levels of confidence.
Yeah,
It'll be fascinating to see how this dynamic plays out in the coming months.
absolutely. Now let's shift our focus to another key player in Asia that the report dives into. Indonesia. Things seem a bit shaky there as well.
Indeed, Indonesia's market has been facing some headwinds.
Okay.
The MSCI Indonesia Index has plummeted 28% since its peak in September 2024.
Ouch, that's gotta sting.
Yeah, that's a pretty steep drop.
What factors are contributing to this decline?
Hmm.
What's making investors so nervous about Indonesia?
Well, the report points to a few key issues.
Okay.
Weak economic growth is a major concern, with slowing nominal GDP and high real interest rates weighing on the market.
Oh, yeah.
And then there's the newly elected president, Prabowo Subianto, who has set a rather ambitious goal of achieving 8% real GDP growth.
Okay, so ambitious targets, sluggish growth, and high interest rates.
Right.
Not exactly the ideal mix to inspire investor confidence.
It's not a recipe for excitement.
But the report also mentions something about a new sovereign wealth fund called Danantara, right?
Ah, yes.
What's the deal with that?
This is where things get particularly interesting. Indonesia has launched this new sovereign wealth fund with an initial funding of $20 billion. And they have some seriously ambitious plans for it.
Okay.
They're aiming to manage all state-owned enterprises and reach a staggering $900 billion in assets under management.
Whoa. $900 billion.
Primarily through leverage.
That's a lot of money.
Yeah.
But using leverage to reach that target, especially in this economic climate,
Yeah.
sounds like a pretty big gamble.
The bold move for sure.
What's the investor reaction to this bold move?
Understandably, there's a lot of uncertainty and concern.
Okay.
The report suggests that investors are taking a sell first, ask questions later approach.
Yeah.
Which isn't surprising given the lack of clarity surrounding Danantar's strategy.
Right.
Plus, there's the fact that dividends from state-owned enterprises, which previously went to the Ministry of Finance, will now be directed to the fund.
So is Danantara a potential game changer for Indonesia, or is it a recipe for a disaster?
Oh, it's definitely a story worth watching closely.
Yeah.
The potential risks and rewards are both significant.
Right.
And it's too early to say how things will ultimately shake out.
Yeah. Only time will tell
Right.
whether this bold move will pay off for Indonesia. All right, let's take a break from specific countries for a moment and talk about a different kind of investment landscape.
Okay.
Gold and Bitcoin.
Right.
The report seems to be suggesting some interesting connections between these assets and the broader market.
Absolutely. This section of the report highlights how interconnected the global financial system truly is. It points out that Bitcoin's price has been closely correlated with the NASDAQ Composite Index,
Okay.
meaning that when the tech-heavy NASDAQ goes up or down, Bitcoin tends to follow suit.
So is Bitcoin just another tech stock in disguise?
Right.
Or is there something more to it than that?
Yeah, that's the million-dollar question, isn't it?
Yeah.
Wood believes that Bitcoin will eventually decouple from the NASDAQ and chart its own course. But until that happens, he's recommending a higher weighting in gold bullion, 40%,
Okay.
compared to Bitcoin, 10% for U.S. dollar-denominated pension funds.
Yeah. Interesting. So he's acknowledging Bitcoin's potential, but still sees gold as a more reliable bet for now.
That seems to be his stance.
Okay.
And it's worth noting that the report also emphasizes a crucial shift that happened with gold in 2022.
Okay.
It broke its link with U.S. dollar real interest rates. This was likely triggered by the freezing of Russian foreign exchange reserves, an event that sent shockwaves through global capital markets and fundamentally changed the way investors view gold.
It sounds like that event really shook things up. So is gold now a safe haven asset in a way that it wasn't before? And how might both Bitcoin and gold react if there was a sudden easing of geopolitical tensions?
Right.
Like a resolution in Ukraine that led to the removal of sanctions against Russia.
Those are fantastic questions.
Yeah.
And they really underscore the point that we're not just dealing with isolated events, but rather a complex web of interconnected forces.
Right.
What happens in one part of the world can have a significant impact on seemingly unrelated markets and assets thousands of miles away.
That's a great reminder to stay aware of the bigger picture.
Yeah.
But it's also a bit daunting, right? How can the average person keep up with all of these moving pieces and make sense of it all?
That's where critical thinking comes in.
Okay.
It's not about becoming an expert on every single global issue,
Right.
but rather developing the ability to identify key trends, question assumptions,
Yeah.
and connect the dots.
I love that it's about seeing the forest for the trees, and I think that's a great place to pause for now.
Yeah. Let's take a break.
We've covered a lot of ground already, from this mysterious doji to potential power shifts and the changing dynamics of gold and Bitcoin, but this is just the tip of the iceberg.
Right. We've got more to dive into.
There's still much more to explore, particularly when it comes to the specific portfolio recommendations outlined in the report.
Indeed, stay tuned for part 2, where we'll dive into those recommendations and see how these global trends are being translated into actionable investment strategies.
That's good.
All right. So we've been exploring these pretty big picture ideas, like duoGE and the potential decline of U.S. market dominance.
Right.
These fascinating developments in India and Indonesia.
Right.
Now let's get into the nitty-gritty.
Okay, yeah, let's get into the specifics.
How these global trends are actually being translated into investment decisions.
Okay.
This report offers some specific portfolio recommendations.
Right.
Which is like getting a sneak peek into how the pros are positioning themselves.
Okay, I'm all ears. I'm always interested to see how these kind of abstract ideas translate into concrete actions.
Exactly.
So let's start with the India long-only portfolio.
Okay.
What adjustments are being suggested there?
Okay. The report recommends adding a 4% weighting in Interglobe Aviation, better known as Indigo Airlines. Indigo, huh?
Yeah.
That seems like a pretty specific bet. What's the thinking behind that?
Uh-huh.
Is this a play on the growth of the Indian middle class and increased travel demand?
You hit the nail on the head.
Okay.
It aligns perfectly with what we discussed earlier about the potential for increased consumer spending in India.
Right.
Despite the recent market correction, there's still a strong belief in India's long-term growth story. And a company like Indigo is well-positioned to benefit from that.
That makes sense. Now, to make room for this new addition, something has to go right.
Right.
What's being removed from the portfolio to accommodate Indigo?
So 2 changes are being made.
Okay.
First, Coal India is being completely removed.
Okay.
And second, the weighting in Thermax, an energy and environmental engineering company, is being reduced by 1%.
Interesting. So it seems like there's a move away from the more traditional energy sources like coal.
Yeah.
And a shift towards kind of a more consumer-focused play.
Right.
It's almost like the portfolio is adapting to this idea of India evolving as a consumer market.
That's a very astute observation.
Yeah. It seems the portfolio is being adjusted to reflect these shifting dynamics within the Indian economy.
Okay, so we've got some interesting moves happening in the India portfolio. What about the global long-only equity portfolio?
Okay.
Any noteworthy adjustments there?
Yes. There's one significant change. The report recommends increasing the weighting in Alibaba by 1%.
Okay.
And reducing the weighting in ICICI Bank by the same amount.
Alibaba, the Chinese e-commerce giant.
That's right.
That's a bold move, especially considering all the uncertainty surrounding the Chinese economy and the tech sector in general.
Wow.
What do you make of that recommendation?
Well, it's certainly a decision that's likely to spark debate.
Yeah.
On the one hand, you have the valid concerns about the Chinese economy and the regulatory environment for tech companies.
Right.
On the other hand, Alibaba remains a dominant force in the Chinese consumer market.
Yeah.
Which continues to grow at an impressive pace.
Yeah, it's almost like this recommendation is saying, yes, there are risks.
Right.
But the potential rewards are too big to ignore.
That's a good way to frame it. It's a calculated risk for sure.
So it seems like these portfolio updates are reflecting a sense of cautious optimism.
Yeah, I think so.
They're acknowledging the risks and uncertainties in the global market.
Right.
But they're also identifying opportunities for growth and positioning themselves to capitalize on them.
Precisely. And it's important to remember that these recommendations are based on a specific point in time.
Yeah.
And a particular set of market conditions.
Right. It's like a snapshot of how one group of analysts is interpreting the current landscape.
Exactly.
So it's valuable information to have.
For sure.
But it's not a crystal ball.
Right.
So, as always, it's crucial for individual investors to do their own research.
Absolutely.
Consider their own risk tolerance and make decisions that align with their personal financial goals.
This report is a fantastic starting point for discussion and analysis.
Yeah.
But it's not a substitute for individual due diligence.
Okay, so we've unpacked these portfolio updates, and we've touched on some pretty complex global trends. Let's take a step back and try to synthesize what we've learned from this deep dive so far.
Okay.
What are the key takeaways that our listener should walk away with?
Well, the report highlights several major themes that are shaping the global investment landscape.
Okay.
We've got this mysterious DOGE factor, potentially impacting the U.S. economy.
Right.
The possibility that American exceptionalism has peaked in terms of market dominance. India's ongoing market correction amidst strong domestic investment.
Yeah.
And Indonesia's high-risk, high-reward gamble with its new sovereign wealth fund.
It's quite a lot to digest, but it paints a fascinating picture of a world in transition.
It does.
The old rules of the game might no longer apply. So are these trends isolated events, or are we witnessing a fundamental shift in the global economic order?
That's the million-dollar question, isn't it?
Yeah, it is.
And it's one that we all need to grapple with as we navigate these uncertain times.
Right.
I don't think anyone has a definitive answer.
Yeah.
But the mere fact that we're asking these questions
Right.
is a sign of how much the landscape is changing.
So what's the key takeaway for our listener today? What should they be thinking about as they process all of this information?
I think the most important message is that the world is changing.
Mm.
And the old assumptions about how markets work
Yeah.
might no longer hold true.
Right.
So it's more crucial than ever to stay informed, think critically,
Yeah.
and adapt to this evolving landscape.
Yeah. I love that it's not about panicking or making rash decisions.
Right.
It's about staying engaged, staying curious, and staying adaptable.
Exactly. And that leads us to a thought-provoking question to ponder as we wrap up this part of our deep dive.
Okay.
Think about the concept of risk that we've been discussing throughout our conversation. Is it something to be feared and avoided at all costs? Or is it an inherent part of opportunity and growth?
That's such a great question. I mean, risk can definitely feel daunting,
Yeah.
but without it, there can be no reward, right?
Right. It's all about finding that balance between caution and calculated risk-taking.
Yeah, that's it.
So as you continue to explore these global trends
Right.
and consider their implications for your own financial decisions, I encourage you to reflect on how you view risk, how you assess it,
Right.
and ultimately how you choose to embrace it or mitigate it
Yeah.
in your own financial journey.
Well said. That's a powerful message to leave our listeners with. And with that, we'll conclude part 2 of our deep dive.
But don't go anywhere just yet. In part 3, we'll explore some additional insights from the report
Okay.
and offer some final thoughts on how to navigate this complex and ever-changing world. Stay tuned.
You know, it's amazing how much ground we've covered in this deep dive.
Yeah, it is.
We started by trying to unravel this whole mystery of DOGE
Right.
and its potential impact on the U.S. economy. And now we're talking about global power shifts in emerging markets and the evolving roles of gold and Bitcoin.
Yeah, it's a testament to how interconnected the world really is, when you say.
It is, yeah.
I mean, what might seem like an isolated event or a niche trend can actually have these ripple effects
Right.
that touch every corner of the global financial system.
It's like that saying, the flap of a butterfly's wings in Brazil can set off a tornado in Texas.
Exactly.
And it might sound far-fetched, but in the world of finance, it's not that far off.
Yeah, I mean, what happens in one market can trigger a chain reaction that impacts, investors and economies around the globe.
Exactly. And that's why I think it's so crucial to stay informed and to think critically.
Right.
And to kind of develop a framework for understanding how all of these pieces fit together.
Yeah, and it's not about trying to predict the future.
Right.
And rather about being prepared to adapt.
Right, exactly, to whatever comes next. So I think that's a really empowering message for our listeners.
Yeah, I think so.
It's easy to feel overwhelmed by the sheer volume of information.
Oh, yeah.
And complexity of the global market. But I think, this deep dive has shown us that it's possible to kind of cut through the noise and identify the key trends that are shaping the world.
Absolutely.
Yeah.
And remember, knowledge is power. The more you understand about the forces at play, the better equipped you'll be to make informed decisions.
Yeah.
Manage risk effectively, and ultimately achieve your financial goals.
I think that's well said. Now, before we wrap up this deep dive, I wanted to touch on one more interesting point from the report.
Okay.
It briefly mentioned how the freezing of Russian foreign exchange reserves in 2022 really kind of had a profound impact on the perception of gold as a safe haven asset.
Yeah, that was a pivotal moment, wasn't it?
Yeah.
Sent shockwaves through the global financial system.
Yeah, it did.
And forced investors to reevaluate their assumptions about what truly constitutes a safe haven.
Yeah.
In times of geopolitical turmoil.
I remember feeling a real sense of uncertainty at that time.
Yeah.
It made everyone realize that even assets that were considered safe could be vulnerable to these unforeseen events.
Yeah, it was a wake-up call, for sure.
Yeah.
And it speaks to the importance of diversification and having a well-thought-out investment strategy
Right.
that can withstand shocks and surprises.
So, okay, we've talked about Doji and global power shifts and the rise of these emerging markets and the evolving roles of gold and Bitcoin and the importance of critical thinking in navigating this complex landscape.
Right.
Is there any final piece of wisdom that you want to leave our listeners with before we conclude this deep dive?
Well, I think the most important thing to remember is that this world is constantly evolving. What holds true today might not hold true tomorrow.
Right.
That's why it's essential to stay curious and keep learning.
Yeah.
And never stop questioning the status quo.
I love that it's about embracing a mindset of continuous learning and adaptation. It's about being open to new ideas and being willing to adjust your course as the landscape changes.
Precisely. And don't be afraid to challenge conventional wisdom.
Yeah.
I mean, some of the most successful investors are the ones who are willing to think differently and take those calculated risks.
Absolutely well said. I think that's a great note to end on.
I agree.
So with that inspiring thought, I think we'll wrap up this deep dive.
Okay. Sounds good.
We've covered a lot of ground today.
We did?
But, we've only just scratched the surface.
Yeah, this is a huge topic.
Of this vast and ever-changing world of finance. So we encourage you to continue exploring and continue learning.
Right. Keep diving deep.
And who knows, maybe we'll uncover the true meaning of Doji along the way.
That would be a fascinating discovery.
It would, until next time.
Yes.
Keep those minds sharp and those portfolios growing.